Okay, cool. Yeah. Well, before we hop into that, Armando, I just want to say thank you for taking the time. Appreciate it. And before we get into the Fed rates and the big news, can you just give us a little introduction about who you are and how long you've been a lender and what brought you into the business?
Well, I appreciate that. Eric invited me to this Zoom call. I've been in business for going on 24 years. I've been a lender for 24 years roughly. And I'm currently working with C2 Financial, which is a mortgage broker. We have access to 98 approved banks. Um, what got me into lending? That's a great question. I had a friend of mine that was doing lending, so that's how I got into it, roughly about 24 years ago. So it's been some time, but I love the fact that I'm able to help somebody make that big decision, which is that investment that everybody wants to make.
Right. Good. And we just had some big news yesterday. We had a 25 basis point cut. You were starting to explain, and I hope you can now explain to us, because I know there's a lot of confusion for the normal layperson and the buyer. When they see that rate cut, they think that that's immediately affects mortgage rates, but that's not the case. It's tied to 10-year rates, and oftentimes the market projects what they anticipate is going to be a rate cut, and then that's kind of baked in. Is that kind of how it works, or can you explain to the layperson how it works?
Yeah, just to make it simple for a call today. So the Fed funds rate, um, when you hear that the Fed chairman spoke yesterday, that just means that the the Fed funds rate's going to decrease, and what they're going to do is whenever the banks borrow from the Federal Reserve to meet the reserve requirement, that's the Fed funds rate. But in terms for the consumer, how that affects it's auto loans, credit cards, and HELOCs because those are tied to prime, and prime follows the Fed funds rate. In terms of mortgage rates, I look at the 10-year Treasury yield. Whenever we see the 10-year Treasury yield increase, and normally we see an increase in mortgage rates. Okay, so there's more to that. And we also could talk about mortgage-backed securities, but I think that's a little bit more complex. So mortgages are bundled together by a bank and sold to the secondary market and are converted to mortgage-backed securities. And you and I, Eric, could invest into mortgage bonds, which are related to similar to what the 10-year government bonds are. So that's how, what we tend to follow, what drives mortgage rates. I mean, there's so much to it. But why the 10 years? Because most people that have a mortgage either sell or refinance within 7 to 10 years. So the 10 years is a good benchmark for mortgage rates. I don't. I'm hopefully this doesn't sound too complex.
No, that's good. And which mortgage products are performing the strongest for buyers that you're working with?
Well, for first-time buyers, Eric, I do recommend with the low down payment, 3.5%. I would say FHA financing. It's a great product. Uh, LA County loan limit for that product is 1.2 million, a little bit over 1.2 million. Ventura County, it's roughly about a million, a little bit over $1 million on an FHA loan. It's a great product. The rates are usually lower than a conventional loan.
Hmm.
Okay, so right now, just kind of give you a ballpark number, an estimate. Obviously, it depends on the down payment, the credit score. With those programs, area you could do a 3.5% down. And right now, the rate as of today at 12 o'clock, because rates could change, change twice a day, could change daily. I would say in the mid fives right now for FHA financing. For conventional financing, let's just say you do 5% down, depending on the size of the loan, you're looking at in the low 6%.
Oh, six. Okay. And then we also want to talk about strategies for success for buyers. Can you talk to us about what a buyer can do in terms of the 2-1 buy down or the 1-1 buy down and what that means and how that
Sure.
looks?
Yeah. So one advantage that a buyer has is that, well, we can do what's called a 2-1 actually there's a 3-2-1 buy down, temporary buy down, and a 2-1 buy down and a 1 year buy down. So let me just explain the 2-1 buy down, temporary buy down, how it works. So what that means is, let's just say that we lock in a rate. You go in, the buyer goes into contract, locks in a rate at a 6%. That and we do it what's called a 2-1 temporary buy down. That means that we can reduce the rate by 2% the first year only. So that rate goes from a 6% to a 4%. And then the second year it goes up 1%. It goes up to the 5%. Okay. And then after the 2 years are up, then it goes back to the original lock rate, which is a 6%. But the seller has to contribute a seller credit to do that type of loan.
So that's not something a buyer can contribute, only a seller can,
Seller or builder.
or builder.
Yeah.
Okay.
Yeah. That's a great question, but I think that's very important that the buyers know that, sometimes buyers, Eric, will say, Armando, but why would a seller give me a credit? Well, sometimes, depending on the size of the loan, that a dollar amount that the seller will contribute towards the buy down is less than actually reducing the price of the home.
Hmm.
Okay. So we can offer that. So the 3-2-1 temporary buy down is more for the seller to contribute versus a 2-1 or the 1 year temporary buy down. So as you go less on the years, then it's less for the seller credit.
Got it. Okay, so let's do round numbers. Let's talk about $1 million prod home and a 3-2-1 buy down. What we could do is potentially we could offer 1,030,000 with a seller credit of 30,000 towards a 3-2-1 buy down. The first year is going to be, if we lock in at 6, it's going to be 3. Second year it's going to be 4, and then the third year it goes back to 5, and then it goes back to 6 after that.
That is correct. Yeah.
Okay.
Yeah. And I went, so here's the thing, Eric. So as soon as you tell me, Armando, I have a buyer, we're looking to do this temporary buy down, I just need to know the purchase price and their down payment, and then I'll be able to determine in our system how much seller credit we need. It all depends on the size of the loan.
Got it. Okay.
Okay.
And I know there's talk about there's two more meetings coming up for the fourth quarter, and there's talk about maybe another couple rate cuts. Is that what you're thinking is going to happen if you had a crystal ball? And if so, how would you advise buyers? Should you wait or what are your thoughts regarding the next couple meetings?
The right now what's happening, Eric, I think uh, inflation is is keeping rates where they're at, in my opinion. I'm not sure what's going to happen in the next Fed meetings, but the most important thing I'm keeping an eye on is inflation. So depending on how that is where that's at, then we'll be able to see. I'm assuming a lower interest rate. So it just really depends on inflation. But in terms of buyers, I know their main. A lot of buyers ask me, Armando, what is the rate? And when I give them the estimated rate, sometimes they say, I'm going to wait for the lower rate. And I say, well, what are we really waiting for? Right? Because if you lower the rate, is that going to, if you wait for the lower rate, is that going to be a $300 difference in payment, 200, $100, 400? Is that what you're waiting for? So we try to find a target rate of what they want to do in terms of that. Do they want to um, if they wait for that lower rate, that might just lead to um, more buyer competition because once the rates drop, then we know there's a good chance that the prices could increase because um, there's so much buyer activity out there. So
Mhm.
the question is, do you want to wait for the lower rate? I mean, you can do that, Mr. Buyer, but the question is, Once that rate drops, then you're going to have a lot of competition, right?
Mhm.
So I think the buyer, what I try to teach Eric is what's important about owning real estate. And we could talk about appreciation. We could talk about the tax benefit. That's something they could talk to their CPA about. They could talk. I have tons of stories of buyers that I had for, a client that just called me not too long ago, 15 years, bought a house. He was able to leverage his equity to pay off his kid's student loan for almost 200,000.
Mhm.
So I think um, the fact that I think people need to focus more. The buyer, I think, needs to focus more on this is a long-term investment. You're going to pass this property over to your kids because the rate, Eric, you could always trade the rate, but you
Mhm.
cannot trade the house, right? You could trade the rate by doing a refinance, okay? Because there's no prepaid penalty, by the way.
Mhm.
Okay, so a buyer, whatever the buyer gets today, what I tell the buyer, I'm going to monitor the rate for you after you're done at the close of escrow. Give it about 6 months, a year, assuming the rate uh, drops and it makes financial sense to the buyer, then we can trade the rate by doing a refinance.
Got it. Okay. And then I know we talked about FHA. We talked about a 3-2-1 buy down, a 2 buy down, and a 1 buy down. Are there any other products that you're excited about?
I think for business owners, Eric, we have a program that all we use is the bank statement deposits for the last 12 months or 24 months.
Hmm.
It's a great product for a business owner that doesn't want to show tax returns because they have a lot of expenses from the business.
Hmm.
So the 12-month bank statement program is a great loan. And also for investors, I also have a product called the DSCR loan. We don't need to see any income documentation. All we need to know, and Eric, you would be able to help us with this, is what the rent is going for that property they're buying for. So the
Hmm.
banks are just going to go off the rental amount
Hmm.
that we can use for qualifying on the DSCR loan.
And so DSCR stands for debt service coverage ratio. What percentage does a buyer need to put down for the DSCR loan?
The down payment, there is some talks about, I have some lenders that could do 15% down, but
Hmm.
normally I would recommend going with the 20% down payment.
Okay, because the numbers need to make sense and they need to be
Correct. And
cash
I'm
flowing.
seeing a lot of people, buyers, and these are investors that are buying investment property. I'm seeing a lot of investors doing 25 to make sure we get that ratio down a bit.
Hmm. Okay, good. Well, thank you so much for your time and your information today. How can people find you if they want to reach out to you?
Simple, if they type in armandosandoval.com, you'll see my C2 Financial website. And I encourage every buyer to just let's have a conversation about, what is it, what options do they have in terms of financing. That way they can reach out to you, Eric, and you can obviously show them the property when we get them pre-qualified. And one more thing, and this is very important. I think if I speak to a client, a potential buyer, I'm going to share all the information as far as my goal is to educate the customer as far as what's available to them in
Hmm.
terms of financing. And that way, Eric, they can make an informed decision. Does it make sense today? Or does it make sense for me to wait for the lower rate? So
Hmm.
that's what I try to teach clients and not to sell them or do anything, but get pretty much educate them in what I do for a living.
Right. Yeah, and I go with that same approach. Just provide all the options, all the education, and then the consumer can make the best decision for themselves and their family. So I think
Yes.
that that's the right way to approach business. Well, thank you so much for your time, Armando. And if anyone needs any further clarification or wants to run their numbers to see what they can achieve in terms of home ownership, I worked with Armando. It was smooth sailing, and he's great to work with. So I give you my vote, and let's go help some more people.
Thank you, Eric. Appreciate your time.
All right. Thank you,
Great
Armando.
working with you. Thank you. Thanks. Bye.
Take care. Bye.